All right, Tesla's earnings are out, and guys, their stock's selling off down a little bit, not much, about 2%. So let's break these down and make sure to follow along for more. So, earnings per share for Tesla came in at 50 cents, and that's adjusted, by the way, versus the 54 cents expected. So that missed, and revenue beat. Look, 28.1 billion versus 26.37 billion expected, and total revenue, believe it or not, actually increased 6% year over year versus what the last two quarters where revenue declined. So they're back in growth mode, guys, for now, that is. We'll see if that lasts. And net income fell 37% to $1.37 billion versus the 2.17 from last year. Not the best. The profit drop reflected lower EV prices and a 50% increase in operating expenses, which the company said was in part due to AI and other R&D projects. And do you guys remember the EV tax credits? Well, the end of the quarter coincided with the expiration of these federal tax credits for electric vehicles, which were eliminated with President Donald Trump's spending bill. And even with the return to overall growth, like I said, 6% revenue growth, Tesla's third quarter was marked by a continuing sales slump in Europe, driven partly by consumer backlash against Elon Musk, which we all know about. And we can see here the stock is up around 9% in 2025. And when it comes to Robotaxi, Tesla said it grew its service area and fleet count for its Robotaxi service in Austin, which involves safety drivers on board, and launched its Bay Area ride-hailing service. So we all know Robotaxi, robots, right? That's what's going to really push Tesla in the future. Let's see. Let's see how it goes, guys. But for now, I'm not a shareholder. If it does see a significant drop, I'll buy Tesla stock. But for now, I just think the value's a little too high. Call me crazy. I'm waiting for a pullback. Make sure to give me your thoughts, follow along for more, and check out the link in my bio for my weekly portfolio updates. I'll see you there.